All right, so we're here on part 2 of our ADUs with Marco Melendrez Contracting. Again, thank you so much for being here and offering all of your knowledge. Today's episode, what we're going to focus on is house hacking plus myth busting. I think this is really important to know because there's a lot of general information out there that keeps us from actually doing what you're doing today. So we're going to touch on that. But most importantly, the first thing that we want to know is how can we make house hacking possible? What do the numbers look like on that end? Ruben, if you could share with us, how can we make this possible for homeowners today or aspiring investors who want to get into the game?
Yeah, there's a lot of different mortgage products, vehicles that clients can use. I think we should use a real life example since we have Marcos, and Marcos is a great example, and we have this property, and we could talk about how this became a perfect house hack. I met Marcos last year, and he was looking to buy an investment property that he could build into and do what he's doing here, right? Which is adding a junior ADU and an ADU, and then building the house and enlarging his house by double the square footage. So he came to me and he said, I'm interested in buying a home. The first thing we did, as always, we got him pre-qualified. We want to make sure he was well qualified. We want to make sure that when he made an offer, you know how we work, we're ready to go, right? Like we knew the numbers. He was comfortable with the numbers. And the product we used in this scenario was a bank statement loan. A lot of our investors don't want to show tax returns or there's all this paperwork. And with the bank statement loan, we avoid using tax returns. So it's just 12 months bank statements, especially if you're self-employed, like you're self-employed. They use, business owners use hacks to save on taxes, but sometimes that hurts them on the mortgages. So you can use any type of mortgage really, whether it's a conventional loan or a bank statement loan, or even a DSCR loan for people buying investment properties that are going to be rentals. So there's really a lot of products that their clients can use.
What's a DSCR loan?
So it's a debt service ratio loan. What that means is that we don't look at tax returns. We don't look at bank statements. We look at the rent the property is going to provide you. And if the rents cover the mortgage payment, that's sufficient.
So what you're saying is there's a product out there for aspiring investors using a DSCR loan that as long as the deal makes sense in rental income,
yes,
plus their own personal income, they can qualify for a loan product such as a DSCR.
Well, we cannot use their own personal income. So the property itself has to cover PITI.
Okay.
Or in some cases, it's interest only because they offer principal and interest payments or interest only payments.
From the tenant?
From the tenant, or even if it's not occupied, from the appraisal report, we order a rental report, and whatever the rent is, if that's sufficient to cover the mortgage payment, we can use that.
Wow.
I mean, there's all sorts of flexibility.
Yeah.
Right?
Yes.
Yeah, that opens the doors to a lot of people who may not have a solidified tenant or like a future plan of how they're going to make an ADU or, another property work for them, an investment property.
And most people don't even know that. Like this is a product that really people don't know about. It's not a product we had maybe 10 years ago. It is a commercial lending product originally, but with how expensive homes are, new products that come to light, like the bank statement loan and the DSCR loan. So these are great products that we can use to start helping more of our clients get into homes.
And how do you qualify for that?
We would run credit. You have to have your down payment, which is going to be greater than 20%. And that's it. It's so easy because we don't even look at tax returns or pay stubs or any of that. We identify the property. We run numbers for the property to see if the rent will cover the potential PITI or interest, taxes, and insurance. And if it does, then we're good to go.
Wow.
Yeah. I know I make it sound like it's real easy, but it is a real easy product when you fall into it. So.
I mean, in most cases, when they say it's too good to be true, it's typically too good to be true. So what you're telling me is there's no strings attached to the DSCR loan.
There's a prepayment penalty. Typically, you can pay out of the prepayment penalty. Also, you do have to have enough assets, right, to be able to make this work. So it wouldn't be a program for somebody that's wanting to start out and it's like I have 5% down, or if it's an FHA type of scenario. Mm-hmm. This is definitely somebody that's put their money away and has or I've seen people tap into their 401ks to take enough money to put the amount of down payment they need.
Wow.
So it's a certain type of client, so it's mm-hmm. not for everyone, mm-hmm. but a lot more customers would qualify for it than they believe. So it's just not a product that people know about. Mm-hmm. So we need to promote it more because it's a good product.
Well, circling back to how you've helped Marco, mm-hmm. And is it Marco or Marcos? Marcos. Okay. So having to help him with this property here and having him building 3 or remodeling 3 units, or this 1 unit here and then adding these other units here. How, as a lender, mortgage broker, how does that look like for your client? I mean, how easy was that process?
So with Marcos, it was really easy to work with him personally because he was really on it. We asked for bank statements and he gave us the bank statements. It took us a day to analyze him and figure out what income we can use from there. And from there, it was him identifying the property and really going through that process. I believe this was a standard close of escrow. It was 30 days, was it?
Yeah, Marco? It was about 30 days.
Yeah, it was 30 days standard close of escrow. And the program was, again, a 12-month bank statement loan program. It does, on this program, we actually don't have a prepayment penalty because we went with a large, one of the bigger lenders. So not all bank statement loans, most bank statement loans don't have prepayment penalties. Now, the progress is now we're getting to step 2, where now we're looking for a bridge loan to do more work. Mm-hmm. And then the last part of the step, once the home is done, we're going to wrap up the first mortgage and the second mortgage with a cash out refinance, because here's what the hack continues. Marcos wants his investment back out so that he can go identify another property and put that money into a different property and do this over again.
Is this the Burr model?
The Burr model, yeah.
Is that what we're talking about here?
Yeah, that's exactly what we're talking. That's what he's doing, you know?
And for our average consumer that's watching out there, can you tell us what the Burr model is?
Yeah, well, you know, and I don't know in detail by detail, but basically is where you buy a property, you invest into the property to build it out, then you take your equity out of the property and you use that money to redo the process again.
Awesome.
So you're working off the equity. You probably know better how to say it because you're so good, but yes, this is what you do, right? And you one at a time. Marcos, why don't you tell us about what you're doing here? What kind of income we're looking at? What kind of cost? What kind of value at the end you're going to be looking at versus the $650,000 when you bought it?
Yes. Yeah, as you mentioned, we bought a little house. It was a little under 800 square feet. And to be honest, I kind of feel it was like a little expensive. But as you guys mentioned, I see potential. What I really buy, it was the property. I see a big lot on a really nice location. That was what I was looking for. So yeah, we bought the house. Now we're doing an addition of 844 square feet, addition into the house. So it was a 2-bedroom, 1 bath. Now we convert into 3 bedrooms, 2 bathrooms. That's what we're doing on the main house. Then we're building an ADU on the back. That's 611 square feet. And that's a 2-bedroom, 1 bathroom. And also we are doing the garage and a studio. That's what we're building it.
Now, the original house that was here, how much would that rent for, you think? The original house. If you had to rent it out just so you bought it and you didn't do all of this, how much you think you could have rented it?
And the original house was a 2-bedroom, 1 bathroom?
That is correct.
Yeah.
Yes. I believe that one probably can be rented for $2,700 to $3,000.
Okay. So I know you've done your numbers because you're a numbers person. So what are you looking at conservatively renting the main house, the junior ADU, and the ADU?
Yes, on this case, we planning to move into the main house. We're gonna move with my family, with my beautiful wife. We're moving in, but I already do my research on rentals, so I believe I can easily rent the main house if it was the case for $4,500. Then the ADU we plan to rent it for $2,700, and this studio is gonna be around $1,700 rental.
Okay, 4,500 on the top end, 2,700 on the ADU,
And 17 on the junior.
Oh,
okay. 17, 4,500. Sorry, guys. Oops, again. I got fat fingers. And then how much is
27.
You're looking at almost $9,000, $8,900. So you went from $2,700 to $8,900. That's more than 3 times the amount. That is house hacking right there. That's cash flow right there. Okay, so when did you start the project? Because I know you bought it last year, but you started the project afterwards. When did you start this project? When do you plan to finish it?
We started the project, we bought the house on May last year, 2025. And of course, we need to wait for the city to approve our plans, which typically takes about 6-7 months. So we really start, I want to say around September, October, we start working in here. So I want to say this project is going to take about 6-7 months from start to completion.
6-7 months, but 3, like an addition, an ADU, and a junior ADU.
That is correct.
and are there any holding costs? What is the monthly? Are there any like payments you have to make on the loan that you took out to secure the property?
That is correct. Because of course we bought the property, we are doing the loan payments every month, but of course that's part of the investment and is within the numbers and is not gonna hurt the equity that we believe is gonna be according to our numbers. Of course, part of the investment.
And for you personally, because this is your investment portfolio, for the construction costs that you're using, is that your specific savings or was that part of the loan that you were able to construction?
Yes, we use our savings. We have some savings ready for this kind of project. We know it wasn't enough because as you see, it's a big project. So we already used so far our savings. And now that's what Ruben mentioned. We're now working on a loan to do the construction, to finish the construction. That's the plan.
And that's very common when it's a big project like this, because it's 3 units really you're adding, right? So it's a lot more cost. So what we do in this scenario is we find a bridge loan. And what a bridge loan is a temporary loan. A bridge loan is not supposed to be there for years. It's something you get for a short period of time to help you bridge across to the finish line. And once we get to the finish line, the idea is now we're going to refinance and pay the bridge loan, the first mortgage, and also pull as much cash as possible out. Now, just to get an idea here, what do you think the total value, once you're done, the appraised value approximately of this home is going to be?
Yeah, according to what I researched so far, similar properties in the area, which I'm not an expert on that, but just to get an idea, I want to say this property may be 1.3 to 1.5. I hope, and I believe that's going to be the value of the property when it's done.
Okay. If we just take the middle, right, 1.4, and if we're able to get a refi cash out up to the maximum of 80%, then we would be able to do a $1.1 million loan approximately. And so that would recover, would that recover that would pay the first, plus pay the cost of the second, and recover cash for you to be able to do that. Is that correct? To do the next one?
That is correct. Yeah, my doubt on the house, I owe $515, I believe. So yeah, that will pay off, and then I still have a good $500,000 to pay off the loan Ruben's gonna give me, for fact. And then still ready for the next property. We're gonna look for the next property. That's our goal.
Oh.
And what are the qualifications for a bridge loan?
Well, the bridge loan we are submitting, we're actually right in the middle of working on that.
Yes.
What I did was submit the work that's been done, the estimated value of the property, the fact he already had 20% down originally, so there's equity there, there's value added. And bridge loans, those type of lenders look at the risk, right, and assess the risk based on that. They'll also will look at his credit, but we already have some offers, and they're higher interest rates because they're bridge loans. So you're typically looking anywhere between 11% to 13%. You're also looking at fees, like typical fees, like escrow title, which is normal. A few lender fees like underwriting, processing, and then several points, like 2 or 3 points. Mm-hmm. But you're also not looking at a huge loan of, 500, like normally bridge loans for this type of scenarios, maybe a couple $100,000. Mm-hmm. So if it's 2 points, you're talking about maybe $4,000. So the costs are minimal compared to if it was $1 million loan.
Okay, cool. So now that we know what our numbers look like, now we know what it means to house hack and how we can create this passive income with the return on investment. I mean, we're looking at tripling our income here. So in our next episode, what we're going to focus on is how do we find these deals, these golden nuggets, these fine gems, diamond in the rough. So everyone who is watching us now, stay tuned for our next episode.
Yes.